Welcome to another installment of The Housing World Is Not Going to Crash, and there are not a flood of foreclosures coming. So today I'm going to talk to you about two big things that for all the people that are saying we're going to have a huge foreclosure crisis to think about. Okay, number one, loan modifications. I cannot stress this enough. Servicers, that's who send people their bill every single month, who are ultimately in charge of collecting the money for the mortgage, are being pushed hard to make sure there's no foreclosures. And what's happening is they're implementing a couple different types of modifications to keep people in houses. So what would those be? Number one, 40-year loan. Yes, a 40-year loan. They're taking, like, you could have people where they were on year 15 and then they didn't pay for a year, so they're lumping in that amount and then they're stretching the loan to 40 years. Yes, that is going to drop the payment a truckload and make it so that the person can stay in the house. Okay, well, what if they can't afford the mortgage balance to go up enough at all, even $1? Oh no, don't worry, they have a solution for that as well. They're going to do what's known as a silent second. So what that is let's say that you owe $500 before pre-crisis, and then you don't pay your payment, it adds up $60K, right? And if they increase your loan to $560, even if they do the 40-year, you cannot afford it. Okay, we're gonna do a modification on the first loan at that $500. Maybe we're gonna lower the rate. Maybe we're gonna do a 40-year term to get that payment super low for you. And then we're gonna take that money that you owe us. We're not gonna forgive it. No, I mean, that's probably number 4. But we're gonna do a silent second. So what it is a second lien on your property where you don't make payments. So is it accruing interest? Maybe, depends on how it's modified. Will you need to pay it off when you sell the house? Maybe, depends on how it's modified. I mean, back in the days, we would see some of this where for every year the homeowner stayed in the house, chunks of money would disappear. So we don't know how that's going to play out, but the bottom line is that if everyone's like, well, they'll owe so much, they'll have to be foreclosed on. Not if you put it in a tidy little lien and don't collect payments on it. And then the third one is dropping the rate. Yeah, so between dropping the rate, extending the term, okay, and potentially having that silent second where they don't make payments on a percentage of the loan, those are really compelling ways to keep people in houses. Did we have this level of modification in 2008? No, we didn't. We had nothing like this. So 2008 is actually when I came into the business, and I worked at a bank that had bought another company that had a ton of foreclosures, like bathe in them. And the modifications were not like that. It was like, send us your paperwork, send us your paperwork, send us your paperwork. You're foreclosed, you're foreclosed. There was none of these safeguards, and you didn't see this type of modification behavior, I would probably argue, until 2010-ish, okay? Because at first, all the lenders were like, crap, we better foreclose. But the world has changed. The government, the banks, everyone saw what happened in 2008. Foreclosure crises do not make lenders money. It does not make the government money. It is not good for anyone except for investors. That is the only people a foreclosure crisis is good for. So between the government, the servicers, and the actual note holders, they're doing everything they can to avoid that. Okay, so very important. Okay, well, what if none of that works? Fun fact, the Treasury has a $10 billion homeowners assistance fund. Yes, and this one I was reading about is pretty interesting, and the states are going to be distributing this money. The key is to prevent homeowners from falling behind on their mortgages. So let's say that you were in forbearance and the modification's not going to work and you're still trying to get a job. Well, reach out to your state pretty soon, because with this homeowners assistance fund, all you have to do is describe and document the hardship. And there are income limits on it, but no other information is required, and you can potentially get money to pay your mortgage. Yeah. Yeah, you can also use it to pay back taxes, HOAs, flood insurance, homeowners insurance. So you've got two really big safeguards here that are going to try to stop the foreclosures. You've got the modifications, which are incredibly aggressive in terms of lowering those payments. And then you've got, even behind that, you've got the Treasury going, oh shoot, that doesn't work? Well, just show us what's wrong and we'll take care of you. So for everybody waiting for foreclosures, how are you going to get past those two things, guys? Seriously, weigh in. So for all the people pro foreclosure, tell me why I'm wrong. For anyone in the real estate market who's watching what I'm watching going, not going to happen, weigh in. As always, I'm licensed in 46 states to do loans. I'm happy to help you guys with any of your mortgage needs.